Hey guys, this is Julie. Going to be taking a look as the market closes. We'll go through this week's price action and some of the trades in the market and talk about the gauntlet that I've set up with Earn2Trade and how I ended up this week changing just about everything that I was going to do at the beginning of the week. Had some technical difficulties. Getting a new template that I was trying to work with. It did not work out running. And what I've done, plan B to rectify it and try to find something that's going to meet the guidelines of the gauntlet, which I don't know if you've tried to pass one of these before. You've got a very minimal amount of risk. So I've set the bar up using the shark indicators back test Rinko. That way I can come in and back test the strategy. Normally on a artificial bar like these Unirinkos or the Rinko bars, the bar open is false. It's sort of like a um, placeholder to make the bar pretty, the way that the offset is used. And so it does not backtest correctly. So the shark indicators were able to create a bar that you could use to make it back testable. So with the way that I'm using this to set the bar for the risk amount that I want to try for the gauntlet that I'm using, I'm in a 50,000 account, and I thought that, $200 to $250 per trade risk would be sufficient. Um, and if you look at the profit target of 3,000 and divide that over the 15 days that you're required to trade, that would be $200 a day. So set the bar up for a $200 bar, right? And that way, when it triggered in the direction that you want to go, hopefully you would be able to get the profit target before it came back against you. And I can see that a lot of these were winners. There are a few losers in here. And again, the idea is that you try to get your $200 a day, not overshoot that, and then go to the next day. When I'm doing the back testing, what I'm going to be looking for is the perfect nirvana trade to take these attempts. I'm going to just set this up real quick, a little 5-point box to give you an example. Here's the 5 points risk that I'll be using. So once the trade executes, the idea is to trail the previous high, right? See, I set up the way this sets up, you get a trajectory. So you trail that previous high up and try to, stay within your 5-point range to get 5 points per cycle. So I have other abilities to know locationally, where I'm going to be trading. Am I in low vol, medium vol, high vol? There are places on the distributions that are favorable for executing trades. Obviously, at the 3 is a good one. And or when you break out of the 1, right here, these worked out real well. So this trade here held this next pullback. If you want to put one runner on trailing but leave one contract fixed for a swing trade. And I think that's how I'm going to do it. So, and the maximum, I guess, if both were eliminated, both losers, then at 400 a day, I would have to stop and wait for the next day and hopefully make it back up. I have to tell you, I am underwater this week, starting out, but I I'm not going to break myself up over that. I know that I can make that back up, and now, especially since I have figured out the strategy that I want to run. I had a very cool strategy that I wanted to use, but it was so CPU intensive. I'm not sure what was happening, but when I was running my Blackbird, instead of the profit targets and stop losses executing, the price was blowing right through them, just like it was in a back test, right? Um, and so that wasn't working out at all. And I had a few fumbles this week trying to figure out, a plan B and what I was going to do. So I think that, modifying the bar to the risk that I want to use will work. Usually I would go in and modify my market analyzer to the price. Um, for the PT market analyzer of a 5-minute bar, for instance. So let me pull this over and show you. So the 5-minute PT123 is the first, second, third standard deviation of the 5-minute opening range, and that's the first 5 minutes that the trading session has, and that's between 8:30 and 8:35. So that would give me the 5-minute one very close to that 5-minute um, range that I chose for my bar. So to optimize this, I may want to change the bar to a 5.25 range instead of a 5-minute range. That might give it a little bit more statistical edge. Um, and these are very noisy, so I'm not, don't expect every one of them to be a winner, although it looks like a lot of these are doing very well as far as, helping to time the pullback and reversal. So I'll be using this strategy to try to get the combine back in emergency scout mode and make up my loss and then get it back on track. When I optimize this further, what I will be doing is noticing if I am inside the ones or outside the ones. You've heard me say that a million times. But so here, these big white lines here, long ones, that's your daily first standard deviation. And anytime you're inside the lines, it's rotational, up and down. And the pink line is the Globex. And the orange line is the RTH session open. So today we went from the RTH session open to fill the gap. There was a long fight at this 4,000 level. There was a call wall sitting there, but when it broke, came back and tested it and then took off. We haven't made it up to the daily one though, so we're inside the daily one. And when you get outside the daily one, that's when price can really start moving. and it starts heading to that 2 and 3 on the outside. So that's when you can get a nice volatility range expansion out trade. So in addition to just, trading to your 60-minute 1, 2, 3s, like what worked pretty good today, um, would be, hitting for those higher targets and or weeklies and monthlies. So I keep my eye on that pretty regularly. I have some templates, other templates that I have put together, and that help show me where I am on those higher time frame structures. So as you can see here, the market's stalling at this 11,600 level, higher time frame. I think this is a quarterly level, so may provide a little bit of resistance because we are, hitting a 90-day level, but we're nowhere near the 90-day period, coming into play. So I wouldn't imagine that it was going to hold for long, and price will probably make it back up to its target, one of these upper white lines, is what I'm thinking. But the game is knowing where these pins are going to be and taking your profit, especially in a combine. Um, I have incurred some losses, so I have to be extremely careful going into next week to try to take my best setups. So that may not mean trying, waiting for the slope to turn around in my favor, right? Waiting for that higher high before executing, don't buy the lows. Don't wait for the higher high. And that will improve the odds of the trade. And if you need slope, go ahead and put a linear regression channel or something on your chart so that you can see, um, where those pullback entries are, and then wait for the bar to close, right? You don't want to sit on a falling knife. I mean, I've gotten cut up so much. We have very limited risk, 5 points, and it sure can take off against you pretty quickly, like it just did right here, going back to this one. So, market just closed. I don't know when earnings start. We might have some earnings coming out. So, next week I'll let you know how everything is going. But this is what, I've decided to do to try to rescue the combine, the gauntlet, and to start my forward progress, and having a plan in place. Trading, I eventually would like to trade with the higher volatility, and that's why I'm so disappointed that my other templates don't seem to be working at this point. I might have to do some further optimization to the code before I can get it to work. Very CPU intensive, but I'm doing some amazing things with the charts. And I can see the circular turns now pretty clearly. Um, so that's going to be very helpful for those second entries. So I would like to get this working. I have a long list of to-do things that I want to do. So that's definitely, I'm going to be working on these really cool looking charts, and getting that up and running. But this will work in the interim, I think just fine. Know the direction I want to go in. This is not a system that you want to be trading both sides. And have, like I said, in Blackbird, the ability to stop trading once a certain stop loss is hit. So when I hit a $400 stop loss, it has to stop. No more, trying to try one more attempt, because it can surely add up, and especially if you're going the wrong way. and you're trying to go short, but the market's going long, and you haven't figured it out yet. So trade with a plan. Trade your plan. So you've got to get a plan, and then you have to trade it. It sounds like they're synonymous, but they're not. A lot of times people will get a plan and then just not trade it. So trade your plan and plan your trade, right? And then try to get yourself situated so that you can pass one of these and throw extra contracts on it when you do. So as I graduate and go to the next level in the trader career path, when I get my 100,000 account and my 200,000 account, my 400,000 account, I don't have to change the algo. I will have arrived at other filter logic so that I'll know exactly when and how I want to execute these trades. And instead of going for distance, I stay with my profit target and stop, and it's probably going to be volatility based. As my ability to time these, I might be able to go to a 15-minute, stay in the 5-minute, 15-minute entry zone volatility, and so I can use that and try to get a statistical edge on the market that way. But just add more contracts to it. So once I find that winning formula, instead of trying to expand the range or try to expand the profit target, stay with what has been proven and then add another contract or two to that. Unless I find myself in a situation where, you know, you know, you can just jump into a river of flying price, and that if you're sitting at your desk and that happens, by all means, that's exactly why you would want to be in a position to have 30 contracts, right? So that you can get in and out of that. And at that time, when you are at that level, one great thing about Earn2Trade is you don't have um, the trailing drawdown, and you don't have the other requirement as far as what we do at the beginning. So we start now. I'll scroll down and show you what that looks like. So we start out and we have that end of day drawdown, maintain consistency. So that's that 30% rule. So we have to stay within 30% of our profit target for any given trade session. That goes away, and we have a fixed loss. So once we've built the account up, we can be in a position to take advantage of those kind of moves. But to get there, what I want to do is I want to keep that consistent path of the same amount of risk so that I can control in the future going forward what these uh, drawdown limits are, daily loss and the drawdown. So I think I can get a handle on that and get this rescued. So I'm going to be in emergency scout mode next week, and I know that I can do it. So I'll let you know as we go forward my progress and any tips or things that I find that I think that you might be interested in. And if you have any questions, just let me know. I'll be glad to chat with you about it. I think I've finally gotten my arms around how I want to do this because the risk is so low. Um, and you really do have to adhere to a systematic process for this. So you can't discretionary trade these. I've tried a million different ways. You have to have a systematic process to make this work. All right, guys, thank you so much. You'll have a great weekend, 3-day weekend, and we'll see you next week. Bye bye.